Welcome to Network Spotlight. I am your host, Mikhail. On today's show, I will be talking to Dylan Shub of Fat Cats Dao. He's also the founder of Crown Capital Dao, a senior correspondent at WGMI Media, and a core team member at Midnight Labs. Dylan has been extremely busy and very gracious enough to have a conversation around everything that he's been building, everything that's been happening in gaming and NFT space. He's been really diving deep into the research, and I think you'll really enjoy the information that he'll share with you. Please support the channel, subscribe, and enjoy. Overall, how have you been?
Yeah, no, I'm doing great. It's been a long time since we caught up. How are you keeping, sir?
Doing well. You may notice the background's a little different. Obviously, changed my location. And last time we connected, I was on your podcast, and we had a whole amazing conversation about security. You were doing all the asking, but oh, how the tables have turned! Now I have the opportunity to ask you all the questions, and there's a lot to ask, Dylan, because you have been extremely busy. Bear market, like what bear market? You don't see those things. You stay busy. I know that you are the founder of Fat Cats Dao, founder of Crown Capital Dao. You're also a senior correspondent and a core team member for Midnight Labs. Is that
Yeah,
correct?
Midnight Labs and WGMI Media.
Okay, yeah. So a lot going on there, a lot to unpack. Let's just start with, why are you so busy?
Yeah, so I was saying to one of the council members on Fat Cats the other day that I feel a little bit guilty that I'm enjoying kind of this market so much because, I'm a research geek. I love being able to have the time to, turn on some classical music or indie or whatever and just start doing research and deep diving into things. And so, the kind of hype excitement that's gone away a little bit has given me an opportunity to do that. What I'm so busy on is I'll talk in different fronts. So on the Crown Capital front, as much as it's a waiting game for games, and for those who don't know, Crown Capital is a DAO focused on purchasing assets that we intend to use in some of the AAA games coming out. And, we kind of intend to have a service model. So, if you think like a medieval town, where there's kind of blacksmith and stuff, we will be producing all the swords and things for the heroes going on their quests, right? That's kind of the Crown model. And so it's a big waiting game because the games we're looking into, like Mirandus and Other Side and Illuvium, are slow coming. And yet they haven't stopped completely, right? The bear market took off the edge for them to have to pump out immediately, but they're still doing a lot of AMAs. They still are doing demos, and those demos are getting better and better. I mean, it's a world since, like the initial Miranda's demo versus the playtest now, remarkably different. So, keeping up with those and seeing the technology roll out and speaking to kind of some of the founders and teams is keeping me very busy on the gaming side of things. And then on the Fat Cats side, Fat Cats is a similar sister DAO to Crown, where we're focused on blue chip NFT brands. And so what we mean by that is kind of, looking for the indie studios that are building the next Nike or Disney, but native to Web3. A very good example of that is Yuga Labs. I think everyone can agree that they've got some very valuable IP at this point. And then what do they do with that IP? Another good example is Azuki, which we recently moved up to our blue chip status. So both of those are keeping me very busy. And we've been working in Fat Cats much more on, I would say, two things. On the research, really trying to start to kind of build out quality banking reports, what you would have expected from Bloomberg and HSBC when you look at projects, looking not only into the technicals, which most people have looked at, but looking at the fundamentals, right? We now have a year and change for some of these projects to really start to look at their actions and build out kind of a detailed report of all the bits and pieces. information still not as forthcoming as a public company would be, but we've got a hell of a lot more now than when they started. And then on the second thing is we're getting to a year end, we're reevaluating kind of our asset allocation and saying, well, who survived, right? Who's still here and building in this bear market and might still have kind of a bit of energy and way to go. So that's what I'm mostly busy with at this time.
And would love to dive a little deeper into some of that research that you're doing. But first, want to take a step back. You mentioned on the Crown Capital side, you're working a lot with the games. How do you feel like the games are changing? How is the bear market changing these games?
Yeah. Yeah. So I think the biggest thing that happened for the games, firstly, was the Axie debacle. I think, that in a single stroke, whether it was a scam or the fall in their price of SLP and stuff, in a single stroke, all that hot air that we were excited about, you and I talking back almost a year ago, went out, right? And this term "play to earn" became toxic, because everyone said was unsustainable. We're still building a game, we're not Ponzonomics. And so first pivot number one was everyone moved to play and earn, or play and own, which is a term I had always favored, because when I originally spoke about all of the space, that was the aspect that I just wanted, right? I just wanted that if I own skins in Fortnite or World of Warcraft, why shouldn't I have full autonomy over my data? I mean, it's mine. I've done the initial payment, whatever else. I should be able to, do whatever I want with it. And so to me, the ownership aspect of Web3 in general is something that I'm still very excited about, right? We've had 15, 20 years now, I think, of the internet. We should own everything like we do property rights in Web2. So that shift was a good shift, but it took a lot of the VC money out. And so games really had to start showing much more meat and potatoes. So the focus of game companies in general became, we're building a good game that's fun first and foremost, that people are going to love, which I think is a good change. And so you saw that change happen. Then the bear market itself encroaching meant that those who had raised hundreds of million already, they were safe, right? They still hiring employees, and they suddenly didn't have to move as fast, right? Because there's something dangerous about opening a game in part, right? Your user base don't want bugs and glitches and problems. And so it's actually ideal for games to just build quietly for 2 years or 3 years and then just launch in one go. But that wasn't acceptable to the very impatient NFT Web3 community. And now they can kind of say, look, no one else is coming for your money. No one else can build as fast as us. Let us do our job. We'll keep giving AMAs and sneak peeks. Let us keep building. So that has been great. I think the negative thing, though, that I've seen that came out kind of the bear and the Axie debacle is no one wants to talk about tokenomics or economics in general anymore. I think maybe because of the regulatory climate as well, but that's disappointing, because I think, you've got this unique kind of person that bought into a lot of these games called the player investor, right? Where, yes, we might want to play the game too, but we're certainly not just players. And they don't know how to deal with that. They don't really know how to talk to all these people that, bought these gaming assets with a certain expectation. And it's become very weird, all the communication with these games around, what are the plans?
So when I talk to different VCs, I'm finding that a lot of them are at a place where they hesitate to look at games right now, and they're looking at DeFi, they're looking at infrastructure, but not so much games. Are you seeing the same sentiment on your end?
Yeah, absolutely. Absolutely. Because, for a VC, they need to have something that's clear. For the early VCs who came into the games, it was so .com 1999 where, it didn't matter. PE ratios and earnings didn't matter. You just had to get a piece of this metaverse pie. It was so cool to put it on your portfolio. And, there was going to be so much money over you would work that out later. And now I think the VCs are going back to, their more responsible approach of which of these projects can we take a proper roadmap and expectation and earning potential and stuff back to our investors on. And DeFi has a lot of that coming out, right? Things like FTX debacle give lots of opportunities because suddenly all the smart developers are looking to create tools for decentralized exchanges, right? Look at Etherscan, for example. How can it be that that is still our go-to block explorer, right? There's still no user interface over there. And there wasn't enough demand for that, right? All the clever developers were working for Certic or other people on the back end. They weren't building all of these trading tools and stuff for decentralized exchange. And so suddenly there's a lot of stuff coming out over there. And that's easier for VCs to quantify and say, if we get in on this, we can make X and we can see a potential exit. Whereas a lot of these games are looking like, in buying a yacht. You think you're paying 100,000, but once all the repairs and stuff come in, it's a deep, deep pit. And that's how many of them are feeling.
But in some ways, it's also relative, right? Because a lot of these projects are struggling right now. They may need the funding. And so if you're a VC and you're willing to take that chance, I mean, you may be getting a lot of value there.
Yeah, absolutely. Look, for the VCs who get to not buy the gaming assets, but are actually investing in the core company, right? I would have loved to be invited to the other side raise, but not on the land purchase side, but on the actual kind of VC end. They fine because they're buying into a company and the company has to give them the books and, they often get a board seat and all of that. I think that kind of works for them. Where it's complicated is buying the gaming assets. And for Crown, we're sticking to those that have raised enough money that no matter if we sit in this recession for 2 years, they're going to finish the product, right? Bankruptcy is not a concern. Could they rug and run off with the money? Sure, but they're registered companies. We can chase after them. And so we're only going for those that have enough money to build out what they promised. And which is sad because there's a lot of good ideas that are getting put on my desk. And I'm like, look, if you don't have that initial 200 million from the VCs, we're not interested. And that's because in Crown, we're doing this novel experiment whereby, we're turning the guild concept, right? The World of Warcraft guild concept into a business, right? Which has never happened before. We've seen that for esports, right? You can see, there are esports teams that have sponsors and play Dota and rank in the top 1% and earn massive prize money and sponsorship deals. That's like buying a football league. And that model exists already in Web 2. But what we've never seen happen yet in Web 2 is what I would call kind of the service model on scale, whereby, you think of your World of Warcraft or your, I don't know, there's a couple of games where you can kind of craft things, right? Eve is a good example for those who know the early games. But the idea is where we actually are taking these gaming assets and running a city or something, and then providing the things needed, to the questers and all of that. And that model doesn't exist yet. And so we're taking a chance with that.
There's been a debate around how easy do we want to make it for a beginner to come in and be able to play these games. Some folks, prefer to set up their game where you need to purchase the NFT first, right? But that also prevents some of the other folks that can't afford the NFT to be able to come in and play that game. What side of the spectrum do you fall on?
I think that there should always be two things have to be there from the start. There has to be a free to play model and it has to be decent, right? I think that that's imperative. So in other words, if someone comes into a medieval society, yes, the initial investors might be the kings and the barons and the big landlords, but there should be a road for kind of the American dream where they can come in, offer their service to someone, maybe grind as a woodcut or something. Yes, they're at a 20% disadvantage in output, but if they're willing to put in the time, they can then, take those funds, reinvest it into a better piece of armor or a better axe or something. You have to have that model in place. Secondly, you want to have a scholarships kind of program that should be robust and simple, and the UI should be there so that people can say, I've got more time than I have money, and you have big land barons that say I have more money than I have time. The exclusivity for things like the Bored Ape Yacht Club and being part of a token gated community, I don't think that should apply to games. And also, I think we have to avoid this kind of play to win model. What I think, people have to shift their head around is, people who buy kind of big land deeds in a game, they're not playing to win. It's just that the shareholders are now the players, right? Instead of kind of raising all the money for Blizzard and Blizzard sharing the income that they get from their skins and all of that with their shareholders, the big land barons are the people that funded the game, and they are producing the skins and they are producing the items that you need to play, instead of you just buying it from the app store or from the game store. So, you know, we need to, balance that between kind of land barons owning the stuff, but not having a play to win mechanic, right? You shouldn't be able to just go to the store and buy the most valuable kind of car and win the racing game. That sucks. That's not fun. You want to have that skill. So in short, it should be a free entry point for people to come in and enjoy the game. It should be fun enough at that free entry point. And then if they want to invest their time, there's a route for them to do well, or invest a bit of money and kind of jump the system.
I imagine it's a very difficult task to be able to understand the overall human behavior and what motivates people and create a game that gets that out of people, get has that addictive element to it and motivates people to continue to play. But essentially that's what you need, right? And I'm sure that tokenomics is a big part of that. So can you touch a little bit on the tokenomics? Like, what are some of the things that you look at when you're evaluating a project?
Yeah, that's a good point, because the good news is we have 20 plus years of gaming theory and history, right? Like, we know what people enjoy. So when it comes to creating a visually cohesive game that's beautiful, or a game that is strategic, or a game that's fun, the good news is that's the easy part, ironically. Even though it might take 3 years of development, but you kind of know when it's going to be a shit game. We know from the trailer these days which movies might be a little bit too woke, or a little bit, missing the point, right? So games as well, right? Games are testing the whole way through. They're showing it to target groups. That's the easy part, ironically, even though it might take the longest to do. The part that we don't know is, we've never in the history of the internet yet had games that had real monetary incentives, right? Yes, there were black markets in World of Warcraft. You could sell your gold or sell your account and all of that, or in Eve, similar things. But because it wasn't completely legal, people didn't view their $10,000 spaceship as exactly worth $10,000. And now that, there is all this asset transfer and stuff, that makes it very different. And I think the only place we do know it from, that people have to go and look at, is maybe Minecraft and Roblox and Second Life. Because there you have full economies of stuff, where people are creating the content, can sell that content, and then take out the money. So I think the tokenomics and the economic parts are the there's a reason why the game devs are avoiding it like the plague. Not just because of regulation, but because many of them can't seem to work it out. And they might need to hire economists and bankers and other people to come in. And what I'm looking for is founders who are honest about that and are trying to work the problem. I'll give a shout out here to Metalcore, for example, because Metalcore is going to have a very battle royale mech kind of game. And one of the things that they said is, their weekly rewards will be based on the previous week's outputs. How much was spent on purchases, how much was spent on repairs and upgrades and stuff like that. That shows me that they're looking at balancing inflation and deflation. That's a proper economic kind of question and outlook to be had. So that's what I'm looking for. But yes, that is, to me, the biggest red flag and danger card. And maybe ironically why, even though I came in from the gaming point of view, I'm maybe most bullish about kind of other side, which is more of a metaverse platform than a game, because I lived through Second Life and Roblox, and I know what works there already.
So, just to transition a little bit on the Fat Cats Dao side, you mentioned that you are spending a lot of time doing research. How is that research helping you with your current work that you do?
So, Fat Cats actually has a pool of funds that we allocate. We're a glorified collectors club, just with a niche focus that is kind of blue chip NFT brands. And doing those research reports allows us to communicate with our community in a much more effective way, right? Because then we've given them a data package, and when we're trying to say, we're trying to allocate this much to just classic art, maybe archaeological art like CryptoPunks, this much to those that are building robust brands, and this much maybe to kind of up and coming blue chips. We can show them the data and then have a conversation around that. We can also speak to these communities and compare projects. It's interesting to see how Web3 now is different sectors and industries, right? We can take 3 projects that are maybe focused on, have token gated mining. We can take 4 projects that have token gated creating plushy, toys, and compare them. And so having kind of a piece of data that we've put up as a research report that our holders can then reference and the council can reference, and we can have a discussion around, it's starting to feel a lot more like, a investment panel and board than it was just like, I'm throwing darts at the wall. Yeah, the wind is blowing in favor this month of, as people said, this is the meta this month, right? We used to talk in almost like divine and constellation terms. Now we can talk a lot more investment banking terms, which even as a collector to me is grounding and wonderful. Because, when I collected Asian art or British porcelain, I was able to look at market factors, right? I was able to say, look, I can see that purchases in jade are up. People are interested in this collectible class, right? So having data quantifiable that people can at least have as an anchor starting point and then talk around is really refreshing and grounding for a change.
What are some, I wouldn't say alarming, but really surprising data points that you've come across as you do the research?
How much emotional decisions we were making. The fact that people will still say when talking about a big brand, yeah, I love the art, or this art is great, it could do well. It's the lack of fundamentals is still alarming. I like to think of myself much more in the value investor camp than in the technical camp, but this is really still very much a technical graph game where people are playing the charts, or people are trying to take a project's art and stuff and work out, could this have a run? Could this have a pump like a meme coin because it's so similar to another project? And that is still alarming to see that we're almost 2 years in since CryptoPunks. I think it's like 2 years, and we're still playing this meme coin game instead of talking about like we do with Ethereum, that how much economics of scale being built on this network. So that is still alarming to me. But at the same time, because so much of it is just emotional investing or chart investing, or this looks like something else that did well, it does help us narrow things quite quickly. Because I think there are north of 10,000 PFP projects, right, that have been minted. To be able to quickly cut out 99% of them and be able to focus on 50 is actually a good way to start. Because if you go into traditional stocks right now, right, and you don't have a specific sector, you're trying to just look for value, you have to do a lot of work to just cut through, a lot of the clutter, and we don't have that yet. So maybe that is a pro and a con.
So what would you say, I mean, with all these different factors in mind, what are some tips that you could give an investor? Let's say 3 tips that somebody could take away with today and apply it to their strategy.
So if they're a trader, the biggest tip for a trader is volume. Volume trumps everything else, because this is still a very liquid market. And so, even if when we talk in terms of 15 million trade that day on OpenSea, that's the entire market, right? That's not your specific PFP. And so if there's no volume on that project, even if there's been some kind of pump or something, that doesn't help you because you might never be able to get out. So volume is still king. The second tip I would say is, what is your time horizon? Because that drastically matters. The decision to buy into maybe, some high quality art or archaeological things like CryptoPunks or stuff, that is a long game, right? Because the volume might not be there. So if you believe in this whole ecosystem, right, then you can make plays like buying a CryptoPunk, which is basically a hedge, the equivalent of almost of the S&P 500. You're buying a hedge on the entire American economy doing well in a certain time frame. So make sure you're very clear yourself on your time horizon. And then, especially as we enter this bear market right now, I would say make sure you sorted out your cash flow. I know we always say do your own research and don't invest with more than you can lose. But if you don't have your cash flow sorted for your other needs, you are going to end up, having to do drastic window dressing of your portfolio to get the cash flow you need for your other operations. So, I think that those would be my three kind of tips without having to make any direct, direct investment advice.
Sure. So volume, cash flow, and
And
uh,
time horizon.
and time. Correct. All right. Well, thank you for those three tips there. What's to come in the future for NFTs in general? You hear some doubters that say, well, NFTs is just art right now. It's just JPEGs. Some are looking into the future and saying, well, there's a lot that you will be able to do. For instance, be able to trace phones on the secondary market and be able to potentially advertise to those individuals that are buying phones on the secondary market. Where do you personally see the future of NFTs going?
Yeah. So, firstly, I think art for the sake of art is huge. And I think people should not underplay that. And even more so, I think, some of the most exciting innovation is happening in the bear market. One of them that I can call out is physical back tokens that Azuki pioneered. And, for those who aren't familiar, what this means is you cannot transfer the NFT unless the physical item is nearby, right? In a certain proximity. Now, why this is remarkable is traditional art has always struggled with provenance, right? How do you prove, number one, that this is the real deal? And number two, so much of a price of an art piece might be based on who owned it before, right? Marilyn Monroe's dress, if you get the same dress, in a secondhand store that was not worn by the person, might be $200, but if it's worn by the person, might be worth $200,000, right? Especially if there's evidence and photos and so on. And so this physical back token technology is going to allow, for example, first application, let's take a Rolex, right? Rolex gives you a certificate. Now, Rolexes are copied all the time. But if the certificate comes as an NFT, the physical watch comes as is, but it's got a chip in it, and you cannot transfer that certificate without the Rolex being physically present, that is a game changer for people being able to buy expensive items without needing to take it to get a certificate and verified and so on. So that is huge. And again, also the provenance aspect of being able to verify the history. A perfect example just came up. Christie's or Sotheby's is having an auction for some pudgy penguins, and one of the pudgy penguins that they gave a higher price to was the pudgy penguin that was the PFP of the original owner before he sold the project. And so they're adding a value for the historical provenance. So from an art point of view, I think we're going to see a lot of art coming into Web3, into the digital space. And so art for the sake of art, if you bet on good artists, or if you look at things that need some of this physical back technology, that is going to be huge, I think. The second part of NFTs is I think we're ending kind of the initial gold rush for PFPs and stuff like that. I think, this 1%, 99% story is coming true. Very few projects are going to be able to lasting mixed media empires. I think we'll use that as a general term. And so, if you were here in wave one, banking on those that have shown a proven team, a proven product, and are delivering stuff that people want, whether it be Yuga Labs or Azuki or Clonex or whatever else, that playing field is getting smaller. And so, there is interest over there, but you kind of need to focus on those. And now I think we're moving into the major Web2 companies coming in and seeing how they're going to apply things. I think, historically, the Reddit story is going to be huge. I think, in the history of kind of how to onboard all your holders and take away all these trippy words like NFTs and ERC20 and all of these kind of nerdy words that no one cares about. And you talk to your holders and say, here's digital collectibles and terms like that, and you hide all the wires. I think that that's going to be massive. And, you know, if people are interested in getting in on, for example, the Genesis Reddit items, those might have value because you've now got 4 million new collectors that really might want to have a piece of that history or something very scarce for something they really believe in. And so I think we're going to see a lot of rewards programs coming in with Starbucks and stuff like that. So that's where I think we're headed with NFTs. But yeah, the PFP era, I think, is coming to an end. I think we're entering the era now of integrating Web3 technology into existing models that already worked, maybe with just a little bit of a spin.
I mean, it sounds like just like any other maturing industry, right? Evolve. And I think with every bear market, make a pivot and change for the better. And I mean, you're absolutely right with these big brands coming in. I've talked to a few of them, and I can't really say which ones because I have to sign an NDA. But there's some really big brands coming in trying to figure out how to um, captivate the loyalty of their community. And we're going to see a lot more big brands coming in trying to figure out how to do that, and partnering with folks such as yourself that are the quote unquote experts in this space. So, Dylan, so much knowledge. I appreciate all the valuable information that you provided. Where can people follow along and learn more a little bit about yourself and all this amazing information that you
So
provided?
we'll toss some links, I think, in the notes, right? But
Absolutely.
Twitter's a great place, and Discord. Back in April and March, even I was saying that I felt social capital was probably the best thing to invest in, and we've managed to keep a very active Discord. So everyone is welcome to our Fat Cats Discord. We kind of mentally masturbate over these topics all the time. It's a lot of fun for us. But yeah, Discord and Twitter would be the place. And as a final kind of thought, I would say to your previous question, you know, try to avoid convoluted stuff. I would say that. Look for someone who's taking something that has already worked in Web 2 or in brick and mortar and adding a twist, right? A loyalty program or a better way to interact with their community or adding kind of a coolness to a Nike shoe where it can be scanned. That's what you should be looking for. Anyone is telling you they're reinventing the wheel and they've got something absolutely that's going to be an industry changer, unless you are yourself an expert in that industry, I would say try to avoid those. You will miss out on some deals, but you will also avoid getting very hurt.
It's very good feedback, Dylan. Thanks so much for your time. Real pleasure. And let's do this again soon.
Absolutely, always a pleasure, Mikhail.